Well, I think that we might do a little bit better than most people are expecting. So the consensus is about 3 million. I think it might be as much as 4. But there's probably going to be a downward revision to May, and I'm really nervous about July. So it may well be that the June report today is kind of the standout, and that both looking backwards and looking forwards, things really aren't so great. It's also curious today that because of the holiday, the payroll report is being released on the same day as the weekly jobless claims numbers. This is people making an initial filing for unemployment benefits. So those data are kind of more up to date than the payroll survey, which was conducted a few weeks ago. And my guess is that those numbers will disappoint again. They disappointed last week. And I think we're maybe on the verge of seeing initial jobless claims going back up again because of the renewed closings and reimposition of controls across the South and the West. So yeah, today's snapshot headline might be okay, might be better than consensus, but I'm really nervous about what's coming down the line.
Ian, that is the big gap in this payrolls report today, isn't it? That some of the reclosures we've had and we've just been reporting on all morning are not taken into account in this survey because it was compiled mid-month.
Yeah, that's a real problem. I mean, the payroll number is one of the quickest things that we get on in terms of the monthly data. It comes out at the very beginning of the month after the reference month. But the reason they do that is that the survey is taken quite early in the reference month. So these numbers are 3 weeks out of date. Whereas the weekly jobless claims numbers are only a few days out of date. And we also get some almost real-time data from a couple of states. Pennsylvania and Wisconsin produce daily jobless claims numbers, and they're going up. It's not just that they're falling less quickly, which is what we've seen over the last couple of months. They're now actually going up. So it does seem that this reclosing, this reimposition of controls is taking people out of jobs that maybe they've just been rehired to. So I'm guessing that some people are being let go for a second time. Now, you're not going to see that in the June payroll numbers today. That's a risk for July.
And some economists stateside have been pointing out you're seeing a widening of the impact now from COVID-19. And clearly, initially, there were some sectors that were hard hit from restaurants to travel and tourism. But now, as this stretches out, the demand story seems to be coming into the mix where many companies that thought they were immune to this crisis because they were not directly in the firing line are now seeing that demand hit, so are shedding workers. What do you make of that second wave?
Yeah, I mean, that makes perfect sense to me. I mean, as well as that story, you've also got the idea that in the leisure and hospitality sector, where the first people who were let go were the frontline customer-facing people, the bar staff, the wait staff in the restaurants, and the frontline people in retail. But now it looks to me like we're probably seeing the job losses working up through the company hierarchy, so into the middle management, into the supply chains as well, and they're not so visible. Because everybody, can see when a bar closes or a store closes, but you don't necessarily see when people are let go from middle management roles. But I think that's part of the explanation why these jobless claims numbers have been so stubborn. We're still running at about 1.5 million per week. And the very worst week after the crash of 2008, which was a catastrophe, the very worst week was 665,000. And here we are stuck at 1.5 million per week and potentially about to go up. So this can't all be people in bars and restaurants because they were let go a long time ago.